Okay, we are live. This is Canadian Mortgage Hangout, also known as Canadian Mortgage Hangout.tv. I am your co-host, Rob Campbell, mortgage broker in the province of Ontario. I am joined by my co-host partner in crime. I shouldn't say crime because we are already a highly regulated industry. Gord McCallum out in Alberta. How are you, Gord?
Yes, and I'd like to avoid the crime word, please, if possible. I just went through a RICA enema, audit, and
practice review, Gord. Practice review.
Practice review. That's true. We did that too.
Awesome.
Time in 15 years. I'm good to go for another 5.
Awesome. I did notice your voice was a little higher than normal. Thanks, Gord. We have some awesome guests today. I've been anticipating this show for the past couple of weeks, and I'm really appreciative of Paul Taylor to be joining us today. Paul is the president and CEO of Mortgage Professionals Canada, and he is also joined to his left by Mike Cameron, regional director with MPC out in Alberta, and Dustin Woodhouse to Paul's right. Dustin Woodhouse, regional director out in the province of British Columbia. Gentlemen, thank you so much for joining us today.
Thank you.
I'd like to thank you both, Mike and Dustin in particular. Sorry, Rob, just for not being on the side of a mountain or a dirt bike for our interview today.
Awesome. I'm happy that they are both wearing suits and not rock climbing gear or whatnot. So I will say that even though I usually like to keep these shows colorful with comedy and commentative dialogue, I will keep it quite serious today because a lot of the viewers today and in perpetuity after this is recorded have a lot of serious issues in front of them. Most of the viewers are likely mortgage brokers, potentially mortgage lenders, some interest in the mortgage industry. So we've got some interesting times that we're in. Last October, the government announced, quite surprisingly, that there were new rules to be implemented effective immediately or within the next 2 weeks of them announcing them. That would have some drastic changes in how money is lent and mortgages are lent in Canada. And in the past, the government, as well as CMHC with policy changes, have given us, as an industry and lenders, 1 or 2 months of time to get ready to adjust to these changes. And I'm happy to have Paul on the show today, as well as the other gentlemen, to talk about the current state of the mortgage industry. Paul, I know you've spent some time in Ottawa with the Department of Finance, or at least with the committee, speaking with the committee. I know there were other mortgage brokers. Mike Lloyd from British Columbia was there, as well as lenders, CEOs of lenders, and as well as Canada Guarantee, one of the insurers here in Canada. I got to tell you, from my perspective, I was yelling at the computer screen when I watched the 4 or 5 hours of dialogue going on with my frustrations as far as the lack of maybe planning or understanding from the federal level on the implications that these changes would have to our industry. Paul, could you tell us a little bit about Mortgage Professionals Canada and you speaking to the government and how you were received and the dialogue, and just kind of spend the next 5 to 10 minutes bringing us up to speed on how that has progressed, please.
Sure. Thanks very much for the invite today. I actually really do appreciate the opportunity to speak to the audience here. The hearings were set originally for Monday and Wednesday of last week. There were some hearings this week, and I'm hearing a rumor that there might be an additional day next week. Stuart Levings, actually from Genworth, also did make a presentation on the Monday. There's another voice from within our industry that really helped to reinforce some of our concerns. I'm reasonably sure that most of your viewers will know our position at this point. Uncoupling the stress test from the Bank of Canada's posted rate, setting it at something that is independent, potentially applying that to all mortgages, not just insured mortgages, allowing for refinances back into the insurance or portfolio insurance mechanism, and don't do anything else. Please don't make any more changes. The committee themselves heard probably 12 hours worth of testimony at this point, a good number from within our membership, lenders, brokers, insurers. We also had a number of sort of periphery industries represented, construction firms, construction associations, and a lot of the messaging very much actually reinforces the notion that These changes have done very little, if anything, to curb pricing in Toronto and Vancouver, but will have significant impacts on economies that are already depressed or soon to become. The Quebec Builders Association and some folks from Nova Scotia actually had some pretty startling statements about the number of housing starts January last year versus January this year. And Nova Scotia specifically actually cited about 9,000 housing starts last year versus 900 this year, because with these changes taking the first-time home buyers out of the marketplace, in all of the areas across the country where they already have a reasonable supply, they now have a glut of supply, and so there's no need for additional construction, and just the overall number of transactions locally has slowed down. So the economies are going to suffer almost in a self-fulfilling prophecy manner as some of these changes roll forward, but I think the committee has very much heard that. I sent a communication out to our membership on, I think, Friday of last week, and I thought the best way to communicate that we are actually getting our message across was to take a quote from Francisco Silvera, who's an MP on this committee, as he outlined the concerns that he had heard from us. So definitely they don't do anything else. Message was in there. They've applied a national strategy to what appear to be very regional problems. So definitely the message is being received. I had met, along with Mark Kersner, who's the current chair of the association, actually even prior to Mark's tenure, Jared Dreyer was also in Ottawa with me a whole bunch of times throughout the year. So prior to these committees, I already met with Francisco Silvera, Raj Grewal, Guy Caron, like a number of the MPs, just to bring them up to speed. And we've been doing our best to educate local MPs about the impact that these changes will have within their own riding and local economies. I'll really quickly just speak to strategy here. The Liberals have a very large majority at the moment, and the Conservatives have been very supportive of our position. Certainly, if you watch the hearings, they've done an awful lot of homework to educate themselves and understand the issues. The Liberals on the committee are also certainly learning about our issues at the moment, and it's great that they've provided us with an opportunity to try and educate them about some of the potential impacts. The way that we think we will strategically be able to affect change here, though, is to get the Liberal MPs themselves to put some pressure on their own finance department, because the changes will hurt their own ridings. The Conservatives can certainly help us draw attention to it, but they have such a large majority, and with Trudeau's popularity rating being somewhere around 65% at the moment, you really do almost have to affect change from the inside of the party rather than trying to exert from the outside through the Conservatives directly. They have been phenomenally supportive of our position, though, to be fair. So the takeaway message for everybody watching this is just talk to your own MP. Regardless of the party, we just need to raise the overall awareness level of the impact of these changes on the local economies. They're very technical in nature. Most folks have no idea what the portfolio insurance mechanism is, let alone what the changes of the impact will be. So there is some subtlety in it. And to be fair to all of the members on the committee, I really appreciate them providing us with the opportunity for our industry and others to express some of the challenges that have been created by these announcements.
Awesome.
That was perfect.
And now we should all pause for a moment of silence in memory of the mortgage market as we once knew it.
Let us bow our heads.
A moment of silence for the 2.29.
Raise a glass. I gotta say, Rob, if you don't mind, I just want to say to Paul, thanks for coming on the show and helping to educate me and our viewers, and Rob, I'm sure too. I remember when in simpler times, it was a really big deal for a mortgage broker to understand the relationship between bond yields and fixed rates. Like that was wow, we're really smart now. We really understand. So if there's a silver lining in going through these challenging times and the regulatory changes, is I think it's creating an opportunity to have a bigger conversation about how our industry works, how our lender partners work, what the back end mechanisms are in terms of financing and that sort of thing. So you know, as difficult as it may be, and as much as we'd rather spend our time talking about other more important things like hockey scores and that kind of thing, we are learning as an industry, and I would encourage any of our viewers out there to take this opportunity to learn as much as you possibly can about your industry and about your part in it, but the part that other players play, because it's been a real eye-opener for me. Speaking for myself anyway.
Well, and it's such a complicated industry, and I don't think everybody sort of understands that. And not just taking information as hearsay, but actually doing your homework to educate yourself on what truly is happening, I think is critical. Especially now, you know, when we've got a lot of rhetoric flying around as well.
Yeah, and it's really forced us to get more involved, and you can't live in your own little bubble anymore, and just focus on your clients. You do have to maybe have a better understanding of what's going on in the broader marketplace. So appreciate the efforts that you guys are making as Mortgage Professionals Canada, and I know in partnership with a lot of the provincial associations to bring these issues up. And I personally think this latest campaign, you know, the response to the rule changes, full credit to MPC for a very coordinated effort to raise awareness very quickly amongst brokers, to get brokers signing what's the word I'm looking for? We were signing online petitions, sending our MPs, organizing these opportunities to speak in front of committees, and even getting the opportunity to do it because of the efforts he put forward. So it's been a welcome sight to see as a member. So congratulations on those efforts.
Thank you for that. I think that certainly the board understood immediately this is the most important issue that's facing the industry. So this is definitely what we have been focused on almost exclusively for the last 4 months. The announcements were made on October the 3rd. I was actually in BC that day because I was meeting with Chris Carter at FICOM, because the disclosure issue in BC was the previous burning platform. This has certainly, in the very near term, become the most important thing to be addressing. So we haven't dropped the ball on the other periphery issues either, but we are definitely focused on building our relationships with the MPs. The government is quite new, and so we were already in the business of strengthening our relationship with those folks on the Hill. This has just expedited our need to do that. And kudos to everybody within our membership as well, actually, our call to take part in that letter writing campaign, because it really is through the collective voice of all of us that we've been able to exert enough, pressure is the wrong word, but certainly heighten the awareness at government of some of the strain that these changes have put on the marketplace.
I think you know, we were talking a little bit before about the general population, the average consumer in Canada is not really understanding the implications of this, nor will they until they jump into the pool and sense how warm that water actually is, right? We're humans are, as a whole, are reactionary beings. We don't care until it affects us. So does this play into the dialogue with the government about, you know, throwing up the red flags, going no more for 12 months or 18 months to allow us time to assess I mean, you didn't say the damages, but I'll say it. Give us 12 to 18 months without any changes to assess where the hell we're going to end up with this. Because, you know, I have in front of me the copy of that email. I sent it through MPC, the email to my MP. I got a response. Later with a very cookie cutter response from my local MP who's in my city that basically said blah, blah, blah. Okay, maybe a little bit more words than that, but something along the lines of, we're really concerned about, you know, we're really focused on the
here.
What's up? What's that?
Concerned about insert issue here.
Yeah, they forgot to take out some of the hyperlinks. It just says insert BS script here. I will say though that they, you know, the local MP is part of the Liberal government. This is not a political slander or endorsement for one side or the other. But as you have probably noticed in these hearings, it's easier to get the opposition to hear us out and to be more available than it is for the current government that maybe implemented this policy. Dustin and Mike, in your experience so far as directors with MPC, can you speak a little bit? Spend the next maybe 3 minutes, each of you, talking about just your experiences thus far in MPC, as far as the dedication from the people working at MPC to help kind of guide us through this current state. I mean, from the ground level, the work that you see being put into this, aside from your own businesses, obviously, because you're operating your own businesses. Can you speak to the level of enthusiasm and dedication for the people at MPC?
All right. I mean, yeah, I mean, you want to speak specifically to the regulatory issues or just in general?
Just in general of the staff at MPC since October the 3rd, and how much work is actually being put in behind the scenes that we, the insiders of the industry, but the brokers out in the field, all we know is that our lenders are getting strangled, our products are getting taken away. It's all bad news. I just want you to speak about your experiences and seeing the work that's being put in behind the scenes.
Well, yeah, I can assure you. I mean, Paul's kind of spoken to some of the details already, but that was one of the things. I mean, I'm going to go back. This is my 5th year as a director, and that was one of the first things that impressed me most when I came on board was the dedication of the staff, and not only at the senior management level, but all the way down the line. And I think unless you take a moment to actually think about what goes on behind the scenes, and I know it's our job as an association to get that message across as far as what does go on behind the scenes, but I'd encourage everybody to take a few minutes and just have a look at what is there from an infrastructure standpoint. I can attest to the amount of communication that we've had via email, direct communication with Paul, with Mark, our government relations committee. Obviously our conference fell just shortly after the announcement, and we rallied the troops to put together a special panel to speak specifically to this issue. And as Paul said, this has been guns a-blazing. I mean, this is all we've been talking about for the last 4 months. I shouldn't say that's not all we've been talking about, because we have a conference coming up in November in Niagara. I have to get a plug in for that because I'm the conference chair. So make sure you come out to Niagara in November. But no, I mean, government relations has been priority number 1 for a number of years. Our membership has spoken to that. And obviously this just gives us a very solid rallying point to jump on it. Dustin?
Yeah, I'm in my 2nd year with the board with Mortgage Professionals Canada, and I mean it's a big board. There's 16 of us in total, and you've got a very dedicated group of people, volunteering their time to fly from all around the country to get together and hammer out strategies around these issues. And as Paul mentioned earlier, certainly the FICOM Form 10 disclosure issue was a huge focus last year, and then as we seem to be running out of different battles to fight on that front, along came this, which has been a predominant one now as well. And yeah, I mean the responses among the board members and Mortgage Professionals Canada staff are pretty instantaneous. I mean, I think Paul's been on a plane probably more in the last 2 or 3 weeks back and forth, and planes, trains, and automobiles to Ottawa and across the country than ever. And, I mean, one of the things they did, the staff did at the staff level, was get that link together on the website, which I believe you click on advocacy, and it's literally like click, click, click. And within seconds, you can send a letter off to your local MP extremely simply. And then we can see which brokers have engaged and actually done that. And it's interesting the number of people who have not taken the time to go click, click, click. And I mean, a letter to an MP is something. It's at least, we have 11,000 members. Why haven't we hit 10,000 as far as the number of letters sent to MPs? So for viewers out there, I would encourage you not only to go and click that link and send that letter off to the MP and have your voice heard by your local MP. But I'd encourage you to share that link. Share it on Twitter, on Facebook, get it out there, on LinkedIn, email it out. I put it into, twice now, I put it into blog posts. So all 2,000 of my clients who receive my blogs every few weeks, they've been given the opportunity themselves. Because that's the other thing is, you know, as Rob touched on earlier, most people, we're reactive and we don't think about it until it happens to us. And I mean, it's the case with a lot of these MPs. I mean, until they go to buy something, they're not going to realize just how restrictive things have gotten and how their own options have been reduced. And I can just hear a few of them saying, oh, hang on, I meant other people need to have things restricted for them, not us, I'm okay. Because we have first-class applicants. I mean, in BC alone, and from 2016 to 2017, over 100,000 additional properties crested the $1 million mark. So 20% of the properties in BC are now above $1 million. So think of a couple of school teachers who bought a house 20 years ago for $240,000. It's now slightly over $1 million. Their options are significantly limited, and they're going to pay a higher rate than somebody else just to go and borrow, say, $200,000 against their $1.2 million home to help their kids get into the market. Like, those stories are the stories that we as individual brokers need to be pushing out to our database, and you need to push those stories out with links so that those people can take action as well. I mean, if 10,000 brokers signed that letter, but also got 100 of their clients to do so, that is an exponential shift. And then maybe we start to get some people's attention. I'll get off the soapbox now.
I think
no, you're gonna have to get back on because I've got a question for you, and I'll pose it to all three of you and let anybody who wants to answer. But Dustin, I think you and I have had brief conversations in the past about there's a risk in putting yourself out there, what can be perceived as a political manner. I get the sense though, when I get the sense that something's happening, something's starting to turn. It really caught my attention yesterday. There was an article either yesterday or the day before where it was implied that the OSFI testimony may not have been entirely truthful, or there may have been an implication of potentially misleading testimony or details that were left out, or maybe research that hadn't been done. And I thought that was really interesting, and that's a risky, as professionals, it's always risky to put our own personal opinions out there, lest we be perceived as biased or lest it have an impact on our own businesses because we may cut ourselves off from a portion of the market that feels differently about the political landscape than we do, or about regulations than we do, things like that. But do you get a sense that people have had enough, and do you get a sense that people are starting to be more willing to speak out and defend their industry and their livelihood, that people are willing to call a spade a little bit more now in public than they might have otherwise been, because the level of frustration and anger and the threat is bigger maybe now than it has been? Because the reality is, guys, we've gone through a lot of real changes over the years. Accelerants to the marketplace, maybe when we didn't need accelerants.
Yeah.
Some that have been restrictive, some that have maybe been well-intentioned but misdiagnosed solutions to problems that didn't exist, or problems that exist, and some that are down right now in I think a lot of people's opinions, creating an anti-competitive environment, creating an environment that's worse for consumers, creating a wealth-destroying effect in the form of reduced equity, borrowing power, on and on and on. Are people fed up enough now to speak out?
Well, I think one of the things that caught my attention today in our meetings, we just wrapped up all-day board meetings today, and Mark Kersner at the beginning of the meeting made a statement that I actually took note of, and he said, we are part of a movement to create accountability in Ottawa. And so I think you're right. I think people are sick and tired of the talking heads, and we want some accountability. So if you're going to make decisions, you're going to make rule changes, you're going to be held accountable for that. So I do feel like this is definitely a movement to hold our politicians more accountable for their actions.
It's a huge opportunity.
Yeah.
to do so.
It is a big opportunity.
I was just going to say, there were bits of testimony that went back and forth where, you know, as brokers in the know, a comment was made, and I'm not going to name names, but there was a comment made by one party about how, in their understanding of things, insurers would lower mortgage insurance premiums, which might offset the bank's increasing rates, which was an interesting comment to make, and unfortunately it was made to an MP who didn't have the knowledge that we in the industry have of the fact that just 2 weeks ago, insurance premiums were raised. So, you know, you've got somebody sitting there from the regulator side saying, well, they're probably going to lower premiums. Well, that is factually inaccurate. 2 weeks ago, they increased premiums. And so, to your point, I mean, I think we do have people at this juncture who are apt, you know, they're on the ball and they're calling those things out as they arise. And I believe the other topic was around these changes are national, not regional, and they don't impact specific regions, which of course, again, it gets right down into the weeds of nuance because lenders actually do look at risk by region. So there are, and these national implications, they are having these national changes are having much broader implications or more significant implications, as Paul touched on, for some of the smaller communities in particular.
Thanks for that, Dustin. And I guess that's good to hear. I'm glad to hear. You know, this very well could be. I like to be a silver lining guy when I can. This very well could be the straw that broke the camel's back, that created that movement or solidified an industry in its own defense, an industry that acts in its own interest, not only for the benefit of our clients, but for ourselves as practitioners. And they may regret the day that they broke that camel's back, because I think the organization level that we have as an association is stronger than it was in the past. The level of communication, the value proposition that MPC has, for example, now going forward, brokers may understand it better. Brokers may understand the value of having an association in our corner that's going to communicate with the government, that's going to hold them accountable. So if there's, the good news is sometimes when you're backed into a corner, you come out swinging. So
just to add to that, Gord, I'll put myself on the chopping block. I think you're accurate there with the straw that broke the camel's back, in the sense that being in this industry for many years now, I've only just recently become a member of the provincial organization, and I'm not a member of MPC, although I did fly out to Vancouver. Paul, I charged you a card for that. I hope you're okay with that. And I crawled into your luggage. But up until this point, I'll speak for all of the brokers out there who don't want to say it publicly, but I will, because we're in this opportunity to do so. Up until all of this schmutz hit the fan, I've been very skeptical about, and in the mental state of, why should I, when I don't see what the benefits are to me other than a local symposium or a trade show? Okay, I'll be very honest. And I'm creating this dialogue for a reason. Up until now, I haven't seen personally, as a non-member, maybe the dialogue is being spread out to members of MPC as to the progress, and you can probably speak to that. I think you touched on that already. But as an outsider, as an independent who's not associated with MPC, I don't know what's being done. And part of the reason, I'll throw Mike under the bus a little bit. Part of the reason we brought Canadian Mortgage Hangout back is because Mike and I had a little bit of a dialogue back and forth about, don't be a part of the problem, be a part of the solution. Mike pissed me off so much with that email that I said, you know what?
The first time we're talking about this is on live television.
Yeah, why not? Why not? What the hell? No, I'm being gentlemanly and cordial, or whatever the hell the proper terminology is. But anyway, I wanted to bring the show back with Gord for that exact reason. You know what, Mike? You're right. You're right. There is no point in 11,000 members of MPC or 15-odd thousand brokers and agents in Canada to sit in our office day in and day out and go, this is bullshit. These guys are not doing anything. It's doomsday. And Mike, although you and I see differently about maybe the progress and whatnot, it did instigate me to reach out to Gordon, get this started. So where I'm going with all this is, for people who are not NPC members, Paul, for people who don't believe in joining the association because of that what's in it for me mentality, I feel now more than ever it is important to become a member of NPC, or a member of an association that's in Ottawa on the ground, speaking for us, fighting for us, which we've seen clearly from the hours of video that's out there of all of you in front of the government. Paul, can you speak to people who are not members and tell us the importance of becoming a member, the importance of voicing our opinion to our local MPs, and kind of coming together as one in a national association like NPC?
Very simply, if everybody is approaching government individually and they all have different messaging and they're fragmenting what their asks are, you'll confuse government and you'll get no results at all. So probably the very first point to consider is we've worked very, very hard with the lenders, the insurers, and the brokers within our community to craft messaging that distills down our asks into some really simple points. These are the support tools that we then provide back out to the membership and assist them in creating their own meetings with their MPs or communicating with their MPs. We understand technically the issues in the industry. I think we're uniquely positioned, actually, quite specifically because we're not a brokers association, but we're not a lenders association, and we're not an insurers association either. We are an industry association. So we can perceive the problems that changes like this create throughout the industry and the effect that it has on each layer of the channel, if you will. Our voice is always stronger when we represent more folks. Just no two ways about that. If we go to Ottawa and we say currently we're 11,500 members, we would probably have more impact if we went and said we are 15,000 members or we are 17,500 members. Those are an awful lot of votes, and it's an awful lot of opinions that are also going to be spreading that messaging out through local communities and economies as well. So we really do need to come together and speak the same language. Join the chorus. Like, we need your voice as part of what we're bringing forward. Now, your investment in the association is an investment back into the channel that is your own profession. That in and of itself, frankly, in my opinion, should be enough for you to want to take part. But if you want to speak on a what's in it for me level, we do have a whole bunch of programs. The education that we provide is discounted against street rate. And if you were really paying a for-profit corporation to bring you the licensing courses or the day-to-day education that we have, you'd be paying significantly higher than we could offer it for. We have insurance programs, we have our earners and omissions programs, the events in the network that we provide, again, by virtue of us being multifaceted through the industry, really strengthen the network quickly. And you get out what you put in. So if you attend our events, you absolutely get a much richer experience as a member of the association than if you pay your dues and don't come. Those are the folks for sure that are probably wondering, well, why am I doing this again? If they're not taking part, then they're not really experiencing the whole purpose of the community that the association is supposed to be.
Awesome. And I will say that the event in Vancouver was an awesome event. It was my first event conference by camp or NPC or however you want to position in the past. And I'll tell you why. All the events just down the road from me in Toronto, I mean, I don't want to go hear a football player talk about team building. I don't want to hear, you know, I'm being funny, but I'm being very serious as well. I'm an hour away from those venues. I do not see value in an astronaut telling me about singing Ziggy Stardust floating in air. I don't give a that. I don't care. However, the content in Vancouver was so appealing to me that I attended. I flew out. I stayed a couple of days, and I found it very, very valuable. And I'm very happy that NPC put that on, and you guys did a great thing there. I want to talk to a suggestion that was made by a couple of pretty seasoned and well-known mortgage brokers in our industry about a national, maybe a national marketing effort. So if the government isn't, they are, obviously they're listening to us and they're having you speak to them, which is way more than probably what's happened in the past, right? if the message isn't being heard, and if there is no indication of changes being stopped or paused for 12 to 18 months, is MPC looking at the potential of throwing a bunch of money from membership, maybe asking membership to pony up the money as well? There's been many other brokers, broker networks, maybe even lenders willing to put out some money to do this in the event that we need to work on a national advertising or marketing campaign to make the general population, again, the people who are not affected until they jump into the pool without a life vest. Are those talks in play? Are those plans in play to make our voices be heard even louder?
Absolutely. So I've got to be really careful about what it is that I divulge here, but our communication strategy is evolving day by day. I think it's probably really important to stress the government think they're doing what is appropriate for the marketplace. And to their credit, they've heard that we have some concerns through our collective voice, and they've given us an opportunity through these hearings to come and educate them about some of the consequences of these changes. There's going to be a report issued by this committee that will be submitted to finance, and they'll be able to consider the requests that the industry at large is asking for. And then we'll see what they're capable of making changes to, shall we say. In the event that to us, we don't feel really addresses the consumer issues that we're raising, because very candidly, and quite rightly really, the government doesn't care about our businesses. The government cares about consumer access to the marketplace and choice. So if we fall down or have been uncompelling in our arguments about the detrimental impacts of these things to overall choice in the marketplace, then yes, for sure, we will change strategy and probably be a bit more publicly vocal about what we're bringing forward. But I really do have to give the government some credit here. It was disappointing that they made these changes unilaterally initially with no consultation for the industry, because I think we definitely could have worked with them collaboratively to provide solutions to the problems that they were trying to address without these particular changes. But at least they're opening a process for a dialogue at the moment, and we should absolutely pursue the opportunity of providing those now, and evaluate our strategy depending upon the results of these ongoing discussions. I don't envy them their challenge. I really don't.
Yeah, I think that's a good point that you brought up, and I wanted to circle back to that with what Gord was talking about earlier, that this has become a bit of a rallying cry because of the impact to our industry. I think we just touched on it, but I want to reiterate that it's about so much more than the impact to our industry. It's really, that's the lesser significant piece, and really, yeah, the impact to the economy and Joe Public is immense. And the problem is that, as we've already discussed, Joe Public doesn't realize that until it impacts them, and by then it's too late.
I've got a question for Dustin, because I think Dustin's probably closest to this, and also I don't want to put Paul on too much of a ledge lest he get pushed, because he's employed by this association. So I'm going to pick on the volunteer directors and ask Dustin to answer a question for me. Dustin, you have a history in BC as a broker. You've been around for FICOM's changes. And now OSFI's changes. There's a common denominator or two in there. And what I'm curious to know from your perspective is when you look at the rule changes in BC with regards to self-regulation of realtors, and you look at the rule changes regarding compensation disclosure and the difficulties that that's presented to the industry, and when you look at the rule changes now that seem to sacrifice consumer choice and competition in the marketplace. Do you feel as though, and we talked earlier about the MPs maybe not being as well informed, and to their credit, to an MP, as an MP, you got to be the ultimate generalist. You can't know everything about everything. So to be fair, if I was an MP or you were an MP, you probably wouldn't know everything about every industry or every issue that comes up. So if they're taking the steps to learn about it, that's great. Do you get the sense at all that there's an ideological opposition with the regulator to competition by non-bank lenders and brokers as a proxy. And do you get the sense that they took advantage potentially of the lack of awareness amongst the elected body to get some of these real changes passed?
I don't know that I would go quite so far as to say that it's necessarily a conspiracy against a certain segment of lenders, although there have been papers written by various federal government employees that indicate that they feel that certain businesses maybe don't have any business being in business. And those businesses are being squeezed a little harder right now. But to go back to your comments about the real estate industry, self-regulation being stripped away in BC, the root of that and the root of a lot of what we're seeing happen was frankly one newspaper article. It was a significant article. It had anecdotal evidence in it. I was sitting with FICOM, with the regulators in a board meeting a few days after that all started to blow up in the media on the shadow flipping. And I turned to the head of the regulator at that time and asked the question, are there any number, I mean, like double-digit number, but I mean, is there even a single-digit number of actual complaints that have been made and actual disciplinary and action being taken on the topic of shadow flipping? And there wasn't. Like, this wasn't even on the regulator's radar because it isn't really a significant thing. But this newspaper article made it a significant thing. And so that single article really was the genesis of the destruction of self-regulation for realtors. Ironically, again, a board that was largely made up of volunteers giving their time, trying to make the industry in which they're involved better. And in a real ironic twist, now that the government has taken over regulation, they've reached out to all those former board members to see if they'd like to come back and be volunteer board members to help regulate the industry because they have the experience doing so. So it wasn't like there was a significant problem with the people regulating the industry because now they're being asked to come back and help regulate it. But to the Form 10 conversation, the conflict of interest disclosure around income disclosure, compensation disclosure. Again, I mean, this is the era we're in. It's all about increased transparency. I mean, financial planners are going through it. Realtors went through it a few years ago. And I think that it is a mountain optically that may in reality be a molehill. And I do know brokers who have for decades, no exaggeration, decades, disclosed their compensation to every single client. And they tell me the most common response they get is, that's all you're getting paid out of this? So, as brokers, we're concerned about this issue of income first and foremost, because, hey, that's our income. But when you lay 21 pages of documents down in front of a client to go through, the client's number one concern is, am I approved? What's my interest rate? What's my payment? How much mortgage money have I got? Is everything okay? Are we good? And like, they're not really too worried about what you may or may not be making out of that transaction. So, that, as I say, I don't think is a huge issue. But again, tying it into this last round of changes as well, so you've got sort of these three different things. I think it's just a situation where no politician, no regulator, no federal government employee wants to be seen to be the one that didn't tighten things up when they had the opportunity to tighten them up, or that, God forbid, push the undo button and loosen something up, and then the wheels come off because they're going to get yelled at. They're going to lose their jobs, right? Why were you sleeping at the switch? Why didn't you make it tighter? Why did you make it looser? Now look what's happened. So I think we're in an environment where it's impossible for a regulator to undo things. One of the things they've all kind of collectively forgotten about, and it's got a lot to do with the fact that you have so many new bodies in, is when we went from a 40-year to a 25-year amortization reduction, 3 different 5-year incremental changes, Mathematically, each one of those changes represented the equivalent of a 1% interest rate hike. So that was a form of stress test being imposed on our industry as rates dropped. So today's low interest rates do not actually allow you, the consumer, to borrow more money. In fact, even before this last round of changes, which cut a significant number of borrowers back by 20% on the amount of money they could borrow, even before that, in early 2016, at 2.5%, you actually qualified for less mortgage money than you did in 2007 at 5% plus. And that bit of math, again, it's complicated, it's complex, it's not a 10-second soundbite for talk radio on the drive hour, news hour, and it's been lost in the mix. And people don't realize, they just look at house prices, they look at interest rates, and they draw a false assumption that today's low rates are allowing us to borrow more when they're actually not at all. Long answer.
It's a great bit of insight. Yeah, it's a great bit of insight, and I encourage any brokers out there to do that math for themselves so they can explain it as clearly as they can to their clients. But good job on pointing that out. It's very true. And our elected officials need to know that. Our regulators maybe don't know that either.
That whole disclosure thing about clients looking at the disclosure saying, that's all you're making? I get that every month from my wife. Touching on the Globe and Mail articles and the other big media outlets, not to just pick on the Globe, but there was a span there of a couple weeks where it seemed like every week another online paper or print media would write an article, as you kind of talked about, Dustin, about the shadow flipping, ooh, the boogeyman, like, is there what can we do as
unregulated lenders too? Yeah, that's a good one.
Yeah. Or it's coming from all angles. We get it from all angles. Oh, the brokers work with lenders who only deal with clients who are less appealing. You can see it, you can hear it in the tone from the MPs' voices when Paul and everybody else is speaking and presenting to them. And actually, on just a side note, Brian Matthew, who's a well-respected broker here in Ontario, brings up a good point. He's saying, unless he's missed it in all the dialogue, another comment to be made is there's nothing really being said about the effect on the profitability on CMHC when they've removed refinances and rental properties, and the percentage that amount represents in CMHC's annual profits. What's that, Mike?
They made it up in premiums now.
Right. But it's interesting to hear the dialogue with the MPs, and one, I won't throw the person under the bus, but there was dialogue about, it was kind of in the sense of, well, you guys are obviously in the business of funding mortgages and you're a publicly traded company and this and that. The little old government is the one backing this. What would you do without us? And there was no, as Paul already pointed out, you've got to be really cautious with the dialogue when you're given the opportunity to speak in front of the government. But, the rebuttal there is, well, let's talk about the profitability provided to the government and the taxpayer via CMHC and the premiums with, a speck of dust of defaults in the massive pool of funds being allocated there, right?
We've actually made those statements in a number of conversations with finance department officials all the way through October, November, and December. One of the first questions I asked actually was, you're building a huge deficit with your own spending, and you're basically stress testing a whole bunch of Canadians that you don't think are managing their own finances very well. But in space of you digging this deficit, you're also leaving money on the table by disallowing a whole bunch of risks that would previously have made you premium. How are you planning on making that whole? Didn't get a very clear response to that question necessarily, but it's definitely one that we put forward. Depends who you talk to. OSFI, they have a mandate very clearly to make sure that the banks and the lenders are well capitalized, right? Their solvency is their number one concern. CMHC is there to promote and encourage home ownership. Ministry of Finance's job is to make sure that Canada is an appealing marketplace on the world stage. So they all really do have very different mandates and perspectives on the issue. and they all address the issue from their unique perspective. So finance actually appeared as though they hadn't given any consideration whatsoever to the amount of revenue that CMHC generates for them, or not, as the case may be. This is a public policy discussion, and it's got much more to do with the level of sovereign liability backstopping that marketplace. That's what we need to address.
Do you feel that, maybe you can't comment on that, but maybe the two gents to your sides can comment on it if you can't. Do you feel that this policy put in place in October was more of a, hey, look at what we're doing to protect you as a country from a political standpoint, or do you think it was fiscally, in their eyes, fiscally prudent to do so?
Mark, they definitely feel it is the fiscally prudent thing to do. As interest rates are low and consumers are leveraging themselves, there's a few ratios they talk about, debt to income ratio, and then the value of property versus annual income has been increasing, and they compare and contrast that to other countries across the world. And our ratios, frankly, when you graph them in a particular way, look higher than others. You can always use data to support a particular position, though, and some of the assertions that the Ministry of Finance would make, I'm not sure I would necessarily agree with. And certainly a lot of the risk around the government backstop, I think, is significantly overstated. The mortgage marketplace is backstopped by a huge volume of assets as well. OSFI, by virtue of regulating solvency, make sure that the insurers and the banks are very well capitalized at the front end of those transactions. There are underwriting guidelines that stop people from indiscriminately issuing poor quality loans in Canada, which is different from everywhere else in the marketplace too. So we already had a very, very stable marketplace. They are concerned about losses on the fringes, absolutely. And they made these changes because from their perspective, it was the fiscally prudent thing to do. I think from our perspective, and what I think most consumers are going to realize if they haven't already, is that the prudence has almost overtaken the social mechanism that was the pursuit of home ownership. And by having more people in their own homes, you're actually increasing civic engagement, and societally we all benefit from that. So on all of the previous tightenings that Dustin's alluded to, the down payment, the amortization changes, I think probably most in our community would say they were prudent. They were the right thing to do at the time. We're at the point now, though, where getting onto that first rung of a property ladder is so difficult. Home ownership is almost becoming elitist. It's great for folks that are already established. It's not very good if you're a young middle-class Canadian family now. And those are exactly the people that elected this government in to support their cause.
Homeless, but the ability to take a selfie. Gord, I want you to ask your question, as I know it's a good one, and then we'll wrap up, gents, because we're pushing an hour, and I want to be mindful of everybody's time.
Yeah, thanks very much for your time, guys. I did have a question, Paul. Maybe a lot of people in our industry may or may not know that you have a background in the insurance industry as well. With correct me if I'm wrong, was it with IBAC?
I was actually the Ontario Brokers Association, but
okay. So you've had the benefit of exposure to that industry and exposure to the mortgage industry now in your role with MPC, and I'm sure you probably see some similarities and differences. I'm wondering if you could maybe talk about, and correct me if I'm wrong, my impression is that the insurance industry, relative to the mortgage industry, at least historically, has been, brokers have a higher percentage of market share relative to their direct competitors, something to the effect of about 66 to 70% market share for insurance brokers relative to direct writers, although that may be shifted. They may actually be losing market share, in my understanding, but have similar competitive pressures. There's probably similar regulatory pressures and challenges. What can you just share? What's been maybe the biggest eye-opener for you coming over to the mortgage side of things about the differences between the industries and some of the opportunities we have as brokers on the mortgage side?
Sure. The mortgage broker channel is on a growth trajectory. There's no doubt about that. More and more consumers are voting with their dollars and deciding that the mortgage broker is the best place to get the financing. That is different from the insurance broker space. I think more and more consumers are actually taking that purchase direct. Some of the direct insurers are really doing a good job of making the purchase of an insurance product transactional. I think it's, you could argue philosophically either side of this. I've always been a proponent that an independent expert is going to look after your interests better and provide you advice, give you technical details about the products that you're picking up, that if you were shopping on your own, you wouldn't even know that you don't know what you don't know. So you have no frame of context to ask the appropriate educated questions about what you're spending your dollar on, or why there are price discrepancies. The insurance sector, though, is incredibly well regulated, and the Insurance Act, across the country, are about 100 years old, so it's very, very mature. The mortgage broker channel, by contrast, is not very much, and the same provincial regulators that regulate insurance intermediaries generally also regulate mortgage intermediaries. However, the legislation for mortgage brokers is very junior in most places. I think the disclosure issue in BC is only a precursor of things to come. I think there's going to be an awful lot of growing pains as the Mortgage Broker Act become more mature and just exist more. There's going to be colonization through all levels of financial intermediary transactions. There are requirements for sole occupation to hold a license in the insurance space. You also cannot rebate premium or induce customers. So those are very different mechanisms. And the reasons why the bank currently is not able to offer an insurance transaction to you through a teller is very specifically because, philosophically, you cannot really offer an insurance product at the same time you're offering a credit product without there being an inherent inducement to, I can give you a better rate as long as you take my, here's my mortgage rate conditional to you also buying my homeowner's insurance product. And that the tide selling inherent in that is what has always, so far, kept those two transactions separate. And there is a Chinese wall requirement. You probably have seen RBC insurance branches right next to the RBC banks. The legislation says they have to be separate and distinct businesses.
Hopefully that level of maturity continues with you at the helm and guiding and leading the industry forward, because I think that'll be good for consumers, which is something we all care about.
Very much so.
And good for the industry, the professionalism levels and that kind of thing. So thanks for that insight.
Gents, I think we're going to wrap up here. It's been about an hour. We would have been longer, but Gord was late. And thank you again for coming on, Paul and Mike and Dustin. Thank you for helping coordinate this. I greatly appreciate it. Tell us a little bit about how people can become part of the movement, joining MPC, or where they can get a hold of you, Paul. Just take a couple of minutes and we'll give you the soapbox to tell us where we can get a hold of you.
I'll post that link, the link after. Sorry.
If you visit our website, Mortgage Pros Can, all of our contact details are right there. All of my email address and direct phone numbers are also there. I'm delighted to take calls or questions directly about any of the activity that we've been involved in the last little while. I'm on the road an awful lot. We do have an in-house government relations staff member now, though, and a gent named Samuel Duncan. So if I'm not able to give you an update on that specifically, Sam certainly can. And if you do have any direct feedback to the comments earlier, if you just need me to give you a sales pitch about why you should belong to the association, I can do that all day long. Give me a call. I'll tell you why we're so good.
All three of us can.
All right, cool. Again, thanks again. Thanks to all the viewers watching or watching this in the future. Reach out to Paul and everybody at MPC. Become part of the fight and the cause here, because I think, as Gord pointed out before, I think more than ever, especially speaking for me personally as the devil's advocate and speaking for everybody else who is not a member, it's now more than ever so important to become a unified voice in this space and watch it mature and hopefully at least get some changes made on that policy implementation. Especially, I'm pretty sure we can all agree on the bulk insurance part of that. Nobody in this field will disagree with the stress test of a high ratio buyer. But certainly conventional lending and bulk insuring is a hard blow to the industry. Guys, thank you so much. Gord, as always, thank you so much. I owe Gord $20 because Dustin ended up wearing a pocket square. I lost that bet, and Paul did not crack a smile through this whole show. So I do owe Gord money. Again, thanks, gents. Tune in 2 weeks from today. We will be having 4 or 5 women in the mortgage industry, members of WIMI, the WIMI group, to talk about a women's perspective in the industry. Thanks, guys. I appreciate it. Reach out to Paul if anybody has a question. Gord's, one last comment.
One last comment. A month from now, so 2 weeks from now is the WIMI episode. A month from now, because we like to have a lot of fun on the show, and this was a really serious topic, we're going to feature Mike Cameron and Ron Butler mud wrestling. It'll be great. It'll be really authentic. Super authentic.
Man. We're going to have to pay an intern on the censor button. Again, gents, thanks so much. When we sign off here, it's just going to shut down. So again, thanks a lot, guys. I truly appreciate it personally. I truly appreciate it. Paul, thank you so much. Go have those 28 pints, and for Christ's sake, get yourself out of that parking garage. Okay, guys?
Thanks.
All right, our ceremonial goodbye. Goodbye.